Okay, look at this. The stock market keeps breaking records. Home values sky high, and Americans, on paper, have never been wealthier, like, ever. So by the numbers, this should be one of the happiest moments in history. But here's the weird part. Ask actual people how they feel about the economy, and it's grim. Really grim. We're talking worse than 2008 grim, worse than the pandemic, some of the lowest confidence we've ever seen. So which is it? Are we rich or are we struggling? Because it can't be both, right? Real quick, if you like breaking down the stuff nobody explains properly, hit that subscribe button. It's free, it helps me a ton, and you won't miss the next one. And if this makes you go, wait, that explains a lot, smash that like button. Seriously, it makes a bigger difference than you'd think. Oh, and stick around, because at the end, I've got a question for you. I want you to drop a comment and tell me exactly where you land in all this. Deal? Cool. Now, let's get into it. Here's the thing nobody talks about. You can actually see this split in the most boring account you own, your retirement fund. Because get this, the average retirement balance just hit an all-time high. Fantastic, right? But at the exact same time, record numbers of people are pulling that money out early. Paying the penalty, eating the fee, just to get their hands on the cash now. And why? It's not for vacations. Most of these emergency withdrawals, they're to stop a foreclosure, to pay a medical bill, to cover somebody's tuition. So on paper, the account looks amazing, but behind that number, people are drowning. So how is that even possible? How can the data scream, "We're rich," while regular people feel the complete opposite? Here's the answer almost nobody says out loud. Both are true. I'm serious. There isn't one economy. There are two. And which one you're living in depends entirely on one thing, what you own. Because when the market goes up, that money doesn't rain down on everybody. It's not weather. It doesn't just fall on the whole country evenly. It lands in specific accounts, owned by specific people. And if you're not one of those people, though happening to you, they're just a headline you scroll past on your way to work. So the real question was never, is the economy booming? It is. The question is, who's actually getting the money? So I followed the trail, and oh boy, there are about 134 million households in America. The richest 1%? They own more than half the entire stock market. Half. Zoom out to the top 10%, and they own almost everything, like 9 out of every $10 in stocks. Which means everybody else, the bottom 90%, they split the leftovers. And the bottom half of the country? The teachers, the nurses, the delivery drivers, the folks literally keeping this place running, they own basically nothing, a sliver. And that's not each, that's all of them, combined. Let that sink in. Now, someone always says, but wait, tons of people own stocks now. It's in everyone's 401k. And yeah, technically, true. But here's the catch. Owning some stock and owning enough stock to change your life are two totally different things. For the bottom half, their stock holdings are tiny. For the top 10%, we're talking hundreds of thousands. It's not even close. And here's where it gets wild. Let's say the market goes up 16% in a year. Sounds great. For a regular family, that 16% might get them a couple $1,000. Nice, but not life-changing. For the wealthy, that same 16% hands them tens of thousands in 1 year without lifting a finger. Same market, same percentage. Completely different result because they own more of it. So sure, everyone technically joined the stock market, but the money never got shared. Okay, forget the charts for a sec. Let's look at real life. Your wallet. Start with the money coming in. Wages went up recently. Cool, a raise. Except prices went up even faster. So that raise, gone. Eaten alive by inflation before it ever hit your bank account. So before the average person even spends $1, they're already behind. And people feel it. When Americans get asked, what's your biggest money problem? The number one answer isn't jobs. It's not low pay. It's the cost of living. Just everything being too expensive. And honestly, no wonder. Prices are up massively since 2020. So it's no shock that most people say their finances are actually getting worse. But okay, here's the puzzle. If everyone's this squeezed, how is spending still going up? Where on earth is the money coming from? The answer? It's coming from the future. It's debt. Start with credit cards. Americans are now sitting on over $1 trillion of credit card debt, and the interest? Somewhere around 23%. Brutal. And here's the sad part. This isn't people chasing travel points. Nope. A huge chunk of folks say they're going into debt just for everyday stuff. Groceries, gas, bills. They're not financing a dream vacation. They're financing existing. There's even a name for it now. Survival debt. And once you're in it, it's a trap. Most people carrying this debt have been stuck with it for over a year, and it's only getting worse. But it's not just credit cards. There's a newer one. You've seen the jokes online, right? People splitting a burrito into 4 payments? That buy now, pay later thing? Yeah, tens of millions of Americans use it, and a shocking number say they're using it for groceries. Groceries. And more than half admit they literally couldn't get by without it. So people are financing their weekly food run just to make it to next paycheck. And then there's the last piece, the safety net, savings. The savings rate has fallen to nearly the lowest ever, and for the bottom half of the country, it's actually negative. Negative. That means they're spending more than they make, every single month, sinking a little deeper every time. That's the divide, folks. The rich pulling away, while everyone else borrows just to keep their head above water. Same country, totally different worlds. Now, economists used to call this the K-shaped economy. Winners going up, losers going down. The rich get richer, poor get poorer, drawn as a letter K. But honestly, that's outdated. The real shape today? It's more like a letter E. Stick with me. Picture an E, 3 lines sticking out. The top line? Stretch it way out. That's the top 10%. The owners. Their money's in stocks and real estate, and both have exploded. They're winning big. The bottom line? Down on the floor. That's the bottom half. Barely any assets, negative savings, drowning in survival debt, just trying not to fall. And that middle line? Tilt it downward. That's everyone in between, whose raises got eaten. They're slipping, quietly sliding down. You can even see it in where they shop, trading the fancy grocery store for the discount warehouse. 3 lines, 3 totally different lives, 1 country. Okay, so before we wrap up, I really want to know, which line are you on? The top, the squeezed middle, or the bottom just trying to stay afloat? Be honest. Drop it in the comments. I read them. Because here's the deal. Add up all the wealth, all the market gains, all the pretty green arrows, and yeah, it looks like a booming economy. But those charts can't tell you the one thing that matters. Who's actually holding it? And that right there is why the news and your bank account never seem to match. It's how you get a stock market at record highs, while regular people feel record low. Because it's the same country, just completely different Americas. See you in the next one.